All right. Good morning, everybody. Good morning, all you magnificent melonheads of the world, and happy Monday, everybody. Today is March 10th, 2025. The new week is upon us. We are off to a rough start. Stocks are deep in the red this morning. And the big story, the big buzzword, everybody is talking about recession this morning. And even in the press, even in, we'll say, presidential politics, there's that word again. President Trump was doing an interview with Maria Bartiromo this morning, and he refused to rule out a recession. Now, it was a much longer interview, and everybody's kind of latched onto that one talking point. But that's a big one here, guys. President Trump in his second term, and a lot of people have been unable to see this because they just hate the guy so much that they just, it's no different. You know, it's just Monday versus Tuesday, the same old orange man bad. But if you actually parse his words, he is taking a totally different approach to the stock market in his second term than he did in his first term. And I think if the people who hate him so much would bother to listen to what he's saying, they'd probably hate him a little bit more. Because personally, while I agree with what he's trying to do, I don't think he's going to be able to do it in any kind of competent way. Nor do I think it's even possible to do this right, because there's no painless way to break an easy money habit. But that's what he's really pushing to do here. He's using phrases like a transition. He's got his Treasury Secretary out there talking about how the economy needs to detox, how there could be some pain ahead. These are all things that do not poll well. These are all things that are bad politics. But ultimately, once you realize, hey, the economy, for 90% of people, we've been in this deep recession for several years now, even though the press told us it's the best economy ever. We all knew that wasn't true. That is the issue that they're attacking here. The problem is there's no way to resolve an issue like that, to break an easy money addiction, without breaking a lot of eggs. And in these cases, these eggs, these are people. These are people's lives we're talking about that are going to be upended. Federal workers, defense contractors, all people who make livings and support families and spend money into the economy with this. Yeah, you better believe it's going to get bad. And I think the market is starting to worry about that. The market is starting to take that seriously. And when Trump was elected, I was of the opinion, as was a lot of people, that it didn't really matter who won the election, because no matter what, they were going to inflate the bubble. They were going to print money to support asset prices. I am starting to realize that very well may not be the case here. And also, by the way, if the president doesn't really care about his stock market bubble, he's not talking about his stock market. He's saying, oh, I'm not even looking at the market. I tell you, these semiconductor companies that are laughing about breaking the law and illegally selling chips into China, you guys better take that seriously, because the president is making it abundantly clear that he cares more about his trade war than he does your stock price. And if you're sitting there saying, I'm just going to keep blatantly breaking the law, selling my chips into China because they'll never purposely pop this bubble, you got another thing coming. They're taking that very seriously. And of course, tariffs is front and center once again. On again, off again tariffs. There was a very funny story came out over the weekend. Shout out to my moderator, Mish, who found this. China hits back at Canada for tariffs. And I remember seeing that, saying, WTF is going on there? China and Canada tariffing each other? I don't see how Orange Man fits into that. Well, apparently back in October, before Orange Man was even elected, Canada put a whole bunch of tariffs on Chinese electric vehicles. I do remember the story about Europe putting tariffs on EVs, but apparently Canada did it too. And Canada also put big tariffs on China's steel and aluminum. And so China is now hitting back. Now that Canada is on the ropes because of American tariffs, the Chinese are like, well, we're going to jump in. We're going to pile on also. And all I can help but think is, why would Canada do that? Why would Canada start a trade war? How could Canada be so belligerent towards their trading partners? Yeah, see, the whole tariff thing, guys, it turns out it's only big news when we do it back. Tariffs is not a new thing. Tariffs have been there for years. They've constantly doing it. It's just the fact that America is now getting involved. Everybody's like, whoa, hold on. Because everybody loves to put tariffs on American exports, but then everybody just hates the fact that there might be any kind of a bill to get your goods onto American shelves and access to American consumers. All of a sudden it's, whoa, let's give trade peace a chance. Well, it just goes to show you this has been going on for some time. Now, pay attention to what's going on in Germany, guys. There's a story in Bloomberg this morning. Germany's Greens are not backing this big 500 billion euro defense and infrastructure bill that they're trying to pass. They have to get rid of their debt limit in Germany to try to build up their military. We talked about that big spat between Trump and Zelensky. All of a sudden, Europe is taking their own defense seriously. Germany wants to spend 500 billion euros on defense and infrastructure. They can't do it without a three-way coalition between the two center parties and the Green Party. All right. The right party in Germany doesn't want the war to progress. And so all the other parties need to get together and pass a bill to increase their own defense spending. Well, the Greens aren't backing it right now, which means the bill is going to get bigger. Because why would the Greens not be backing it? Probably because they want more money for windmills and more money for solar panels before they agree to sign on to it, which means that 500 billion euro number is going to be bigger. Whether it's going to be wind turbines or some other kind of subsidy or, I don't know, solar-powered night vision goggles for the Army. I don't know what form this is going to take, but the fact that the Greens are holding out tells me the price tag is going to go up, which means the euro is going to continue to strengthen, which it's doing this morning. Also strengthening this morning, once again, is the Japanese yen. Guys, pay attention to what's happening in Europe and what's happening in Japan here. There is a shift going on in the world order from the defense spending in Europe to the unwind of the carry trade and the strengthening yen over in Japan. And of course, remember August 5th, guys. Remember that stock market panic that we had in the summer when they took away the sell button in all of the brokerage houses. The Japanese yen is almost back to the level that it was back on August 5th. And the Japanese 10-year yield is significantly higher than it was back on August 5th, which means that unwind of the yen carry trade, that is an existential risk to this market, and it's still out there. And I have to wonder, this sell-off that's being led by tech stocks, this sell-off that's being led by Bitcoin, down big again this morning, Bitcoin. How much of this is recession fears and orange man bad? And how much of this is a quiet, orderly unwind of the yen carry trade that's been happening for the last couple of months? We're going to look at the chart. I honestly can't tell you which is the more powerful force in markets right now. I think both are probably playing a role here. And we've also got a very interesting story that bears watching going on. Rocket Mortgage is buying Redfin. That's interesting. The people who sell mortgages are buying the data firm that tells people how big of a mortgage they're going to need. That seems a little conflicty of interest to me. Something you might want to watch out for. And when you look at the price Rocket Mortgage is talking about paying for Redfin, it gives me the heebie-jeebies. Something about that deal does not smell right. I can't quite put my finger on it. But why don't we shrink my big melon of a head and let's see what's going on in markets this morning. Don't forget that like button for the YouTube algorithm. And if you're new here, hit subscribe so you can come on back and have your coffee with the melon heads, because we do this one every morning. And look, guys, the market caught a nice bounce on Friday. They closed above the 200-day moving average. I'll show you that in the chart in a second here. But fear is still driving markets this morning. We are still deep in extreme fear territory, although we're down about 6% and change, not quite into correction territory. We're still a long ways from that 10% mark down, which is where you would typically call it a correction. Now, the S&P this morning is down by 76 points ahead of the opening bell, a full 1 1/3% lower. So the sell-off is continuing. Now, the S&P had a good day on Friday. This is showing, these are daily candles now on the S&P here. You can see on Friday that green candle caught a nice bounce and closed above the 200-day moving average. It was looking like, hey, that might be it for the sell-off. But, of course, we're going to open somewhere down here now this morning. So the 200 line is about to go away. This sell-off still has legs. The Dow, meanwhile, is down 1.1%, 466 points lower for the Dow. It is pretty close to the lows of the morning and still heading lower. And the NASDAQ is leading the way lower here, off by 1.6%, 320 points lower for the NASDAQ. Tech continues to lead the sell-off. Looking over at the dollar, it too is lower this morning, 103.72. That's off by another 11 basis points as the euro and the yen continues to strengthen. That is driving the Dixie lower here. And looking over at the bond market, we've got yields are sharply lower, especially on the long end of the curve. Once again, we've got the 30-year Treasury is down 6 points, 4.556 for the 30-year. The 10-year is at 4.248. That's down 7 points. The 2-year at 3.946, down by 5.5 points. And the 1 month is at 4.308. That's off by a fraction of a point. Keep in mind, guys, when you see yields heading lower, that is bond prices heading higher. So we have people running to bonds for safety this morning. This is a risk-off trade. We're seeing stocks sell off, and people are moving out on the long end of the yield curve. Meanwhile, commodities are not doing as well either. Although we have something of a safety trade, you also have a lot of levered positions in gold recently because gold has been pushing all-time highs. And so gold is kind of sitting out this flight to safety this morning, $2,906 for spot gold. That's actually lower by about $4 or 0.14%. Spot silver is also modestly lower here, $32.47. That's down by about a nickel or 0.17% lower for silver, but I still like the shiny. Copper is down 0.4%. Platinum and palladium are both up by 1% and change. And crude oil is up about 15 cents here, $67.20 for April WTI futures. That's about 0.2% higher. Now let's take a look at Bitcoin. It was a bloody weekend for Bitcoin. A lot of red here. We traded last night as low as $80,700 on Coinbase. Now we've caught a little bit of a bounce right now. We're trading about 82,841. But once again, important, we are below the 200-day moving average. For Bitcoin here, a technical breakdown. I definitely think something is going on here involving liquidity and this yen carry trade. There's not a lot of talk about liquidity right now. A lot of people are more focused on tariffs and recession and orange man bad, but the things happening overseas bear watching here. And also related to Bitcoin this morning, we got this one from Walter Bloomberg is saying MicroStrategy files for offering of up to $21 billion. Of 8% Series A perpetual strike preferred stock. Look, MicroStrategy is issuing shares, and what are they going to do with the money? They're going to buy more Bitcoin. This is Michael Saylor's infinite money glitch. He is back at it again. Maybe he's looking to try to put a bottom in on Bitcoin. I don't know. But MicroStrategy probably not looking so good here this morning with Bitcoin heading lower. But this is the big story this morning. Trump declines to rule out a recession. And the president sees a period of transition as he tries to reshape the U.S. economy. Who's a Samuel L. Jackson in Pulp Fiction. Luckily, you've caught me during something of a transitional period here, Ringo. I guess Jules is about to walk the earth like a bum. I don't know. President Trump declined to rule out that the U.S. economy would contract this year and enter a recession, saying that his sweeping economic agenda could cause short-term turbulence that he believed would drive future prosperity. When do you ever hear politicians talk like this? Almost never. I mean, look, I get it. Trump's not your traditional politician, like him or hate him. He does not do things by the old playbook. I think that's putting it mildly. But admitting short-term pain is coming, like eat your vegetables, this is not the kind of thing politicians say ever. But I think it's accurate. I do think there's short-term pain coming. I actually think it's short and medium-term pain coming. And that, yes, it could drive future prosperity, but I think any prosperity that might come from a return to sound money policy is probably way out in the future because we have a 50-year hangover from all of this easy money that we're going to have to overcome. Asked in a Sunday Morning Futures interview on Fox News if he was expecting a recession this year, Trump replied, "I hate to predict things like that, especially because it's probably going to happen. There is a period of transition because what we're doing is very big." Trump has moved to overhaul the U.S. economy in an agenda focusing on new tariffs, limiting immigration, and cutting regulations, government jobs, and taxes. He's looking for spending cuts in a number of federal programs. While many businesses have cheered his broader agenda, the uncertainty over tariffs or close trading partners, Mexico and Canada, has rattled markets. He has proposed pulling back tariffs multiple times in just the past few months. Now, he also had a pretty... I don't want to say wild statement. Yeah, it was a pretty wild statement when he was talking about tariffs, saying we're going to make so much money off of tariffs that we're going to be rich. Look, guys, tariffs don't work that way. Tariffs are paid by the importer, which is American companies, and then those costs are typically passed on to consumers, which is us. So when he comes in and says the government's going to be rich because they're collecting so much money in tariffs, understand, guys, they're saying we're going to be rich because we are going to take your money. All right. Now, I'm not a big fan of tariffs. I get what he's trying to do. I get that he's trying to reshore American manufacturing, and I understand the long-term goals here. But I don't think many people who are cheering this stuff understand the short-term pain associated with those goals. And look, GDP now is starting to reflect it. This is from the Federal Reserve Bank of Atlanta. They put this out. As of right now, the Federal Reserve Bank of Atlanta is predicting a negative 2.4% GDP growth for the first quarter. That has fallen sharply. Mostly this big drop here that was a couple of days ago. This was the big explosion in the trade deficit when a lot of companies were trying to front run those tariffs by importing more stuff. Well, remember, more imports drives GDP lower because it makes the trade deficit bigger. So that's the big contributor to this decline in economic activity. Now, that's probably going to be a one-off. Once the tariffs get here, that's going to go away. So that alone is not enough to send us into a recession. But a slowdown in consumption driven by the tariffs, that is possibly enough for a second quarter of negative GDP growth, which would meet the textbook definition of a recession. And, well, let's just say I don't expect the press to fall in line behind the right and try to define their way out of a recession like they did in 2022, a recession that I think did start in 2022 and never actually ended for most people. But, again, don't expect the press to talk like that. And then this story really caught me off guard. China hits back at Canada with fresh agriculture tariffs. It seems the whole tariff thing is not just an American story here. This actually predates Trump's administration by quite a while. This is on March 8th. China announced tariffs on over $2.6 billion worth of Canadian agricultural and food products on Saturday, retaliating against levies Ottawa introduced in October and opening a new front in a trade war largely driven by U.S. President Donald Trump's tariff threats. Yes, why would Donald Trump do that? Why would he go take over Canada and have them put tariffs on China? This is like the meme where the guy turns around and shoots the guy in the chair and says, why would Donald Trump do that? Anyway, the levies announced by the Commerce Ministry and scheduled to take effect on March 20th matched the 100 and the 25% import duties Canada slapped on China-made electric vehicles and steel and aluminum products just over 4 months ago. Now, I do remember the tariffs on China's EVs. That was a very big European thing a few months ago because these BYD electric vehicles, they're absolutely destroying Western-made electric vehicles. They're just much cheaper. And apparently the quality is not as good. But considering the difference in price, the step down in quality is more than justified. We've seen Tesla's sales in China fall off a cliff. Now, that may be accelerated by Musk cozying up to Trump, but that's not the only thing going on there. The decline in Tesla's sales in China started way before Musk came out in favor of Trump. And, of course, now everybody and their brother is putting tariffs on China's EVs. The steel and aluminum tariffs kind of took me by surprise as well, that Canada would do that. By excluding canola now, this is what China put their tariffs on. It was a lot of seed oils. By excluding canola, which is also known as rapeseed, and was one of Canada's top exports to the world's agricultural importer prior to China investigating it for anti-dumping last year, Beijing may be keeping the door open for trade talks. So I don't know how they're keeping the door open for trade talks here by putting more tariffs on things, but this is a global thing going on. The world is deglobalizing. And another deglobalizing story, Germany's Greens reject draft debt package in Parliament. This means that bill that's going through Germany, that spending bender that I've been talking about, it's going to get even bigger. Germany's Green Party said it will reject a debt finance package that would unleash hundreds of billions of euros in defense and infrastructure spending, leaving Chancellor-in-waiting Friedrich Merz without the two-thirds majority he needs for a constitutional amendment. And guys, I just want to remind you, this was always supposed to be a defense bill. This was always about building up the military. But then they squeezed in there that defense and infrastructure thing. You notice, and infrastructure. And as we have seen, infrastructure can mean freaking anything. So just wait until you see what they squeeze into this. It's going to be hilarious. Merz, who is likely to succeed Chancellor Olaf Scholz after winning last month's election, had sought Green support for the measures. The debt spending was embraced by NATO partners as a way to bolster European defenses as President Trump upends transatlantic relations. Merz's Christian Democratic-led bloc and the Social Democrats, who are in talks to form the next coalition government, reached an agreement last week to largely detach defense spending from Germany's debt restrictions and launch a 500 billion euro infrastructure fund. The co-leader of the Greens Parliamentary Caucus, Katharina Droge, blasted the incoming coalition's decision to leave the party out of discussions, but signaled that it was prepared to negotiate a real reform to constitutional debt restrictions, which means the Greens want a bigger number and they want their stuff in the bill too, which means, like I said, Germany's spending bender. The number is going to get bigger. And look, the euro continues to strengthen because they're looking at massive new demand for euros. Where's Germany going to get the euros? They're going to borrow them, which is going to stress the European debt market. And of course, ever since that blow up right here, this was that blow up between Trump and Zelensky in the Oval Office, we have seen the USD EUR chart head lower and lower. That is the strengthening of the euro versus the dollar, and it's continuing again this morning. Now, interestingly enough, we're actually seeing the interest rate on the German 10-year Bund head lower on this news this morning. Here is this decline in the German 10-year yield. In my opinion, that's a little misplaced because ultimately what's going to happen is the number in this bill is going to get even bigger, which means they're going to do even more borrowing from the bond market, which means the demand for money will go even higher and the price of money, interest rates, will go even higher along with it. So right now we got a little bit of red. I think we're going to see a whole lot of green coming out of this once the Greens are bought in the deal and start making their demands. And look, ultimately, this is leading to the European Central Bank is going to have to return to Zerpenber here. There's just no way the European debt market, which is already on the brink of a liquidity crisis, is going to be able to absorb all this new spending without the central bank financing it. We also got to keep an eye on Japan, guys. That's another one. The 10-year Japan's 10-year yield at its highest level since 2008 on bets for BOJ hikes. That's right. We've got a Japanese central bank that's going to hike any day now as well. Japan's benchmark 10-year government bond yield rose to the highest level since 2008 on Monday at a time when Treasury yields ticked lower again, underscoring expectations that the Bank of Japan will keep hiking interest rates. And I think when they're talking about Treasury yields ticking lower, I think they're talking about U.S. Treasury yields ticking lower here, which means the gap between interest rates in Japan and the U.S. continues to close. The arbitrage opportunity of that yen carry trade continues to get worse and worse. The moves in Japan are in contrast to U.S. Treasuries, which rallied across the curve as President Trump's policies cast uncertainty over the economic outlook. While BOJ officials are said to be leaning towards keeping interest rates unchanged at the next meeting that concludes on May 1st, overnight index swaps show an 85% chance of a hike by July, gathering to a virtual certainty in September. So the BOJ probably not going to move in May, but almost certainly by July and definitely by September, which means interest rates in Japan going higher. But meanwhile, the long end of the Japanese curve, they're not waiting. They're going higher once again here. These are daily candles on the Japan 10-year government bond yield. Right now, 1.555% up again this morning. Look, this has done nothing but rise for the better part of 2-3 years now, guys. And almost more importantly is the value of the yen. Look at the USD JPY chart here. The value of the yen is rising again this morning sharply. We're now at 146.88 yen to the dollar. That is down from a high of about 158 that we saw back at the beginning of January. Remember, this chart moving lower, that is the yen strengthening. Now, look at where we're at right here. We're basically as low as we've been since Friday, August 2nd. And you may remember it was the following Monday, August 5th, was when we had that panic in the U.S. stock market, and everybody was talking about the unwind of the carry trade. And then we had all those ridiculous articles in the financial press where a bunch of analysts started assigning arbitrary degrees of completeness to the unwind of the yen carry trade, which is just totally random numbers grabbed out of thin air because nobody even knows how big the yen carry trade is. The estimates vary from a few hundred billion all the way up to tens of trillions. I mean, so they have no idea how big this is. But I do think this has somewhat contributed to what we're seeing in this stock sell-off, because these sell-offs are constantly led by tech stocks and Bitcoin. And tech stocks and Bitcoin are some of the favorite assets for Japanese borrowers to park their money in. They borrow yen, they convert to dollars, and then they pay for things like Bitcoin and tech stocks with those dollars. That's the yen carry trade. And if the carrying cost of that yen debt keeps going up And if the yen keeps strengthening versus the dollar, that also adds to the carrying cost of that debt. You start to think maybe it's time to unwind that, especially if tech stocks are heading lower and Bitcoin is heading lower. And well, I wouldn't be surprised to see this chart start accelerating to the downside. So guys, pay close attention to this yen chart. Pay close attention to Japanese interest rates. The same thing with the euro, the same thing with the German bond market. Look, they're talking about how Trump has upended the global order. That's not just a talking point. That is happening. The unwind of the carry trade, the blowout in interest rates in Germany, and the Europe having to pay for its own defense, and spending benders in order to compensate and get consensus around this stuff. I don't know what the net effect of this is going to be on the world, but if you're one of these globalist Keynesian easy money guys, this is your worst nightmare, this scenario that's playing out right now. And well, that's the people that are in charge of the world financial system, isn't it? The globalist Keynesians. So another one to keep an eye on here, guys. This story gives me the creeps. Rocket to buy real estate broker Redfin for $1.75 billion. And it's that price tag that's got me even more creeped out here in this story. Rocket Companies is pushing deeper into the property market with a deal to buy Redfin that values the real estate listing site at $1.75 billion. The Detroit-based financial technology group will pay $12.50 for every Redfin share in an all-stock transaction, according to a statement Monday that confirmed an earlier Bloomberg report. The price represents a 63% premium over the volume-weighted average price of Redfin common stock for the 30 days through Friday. Look, that's more than a 100% premium of Redfin's closing price on Friday. This gives me the creeps. Look at what Redfin stock was at the close on Friday, $5.82. And now all of a sudden, they're going to buy Rocket Mortgage. Rocket Mortgage is going to buy them for $12.50 a share. When they closed at $5.80, they're paying more than 100% premium for this thing. Why? What is going on here? I mean, right now the market is somewhat, I'd say, doubtful that this ever happens because pre-market it's only trading for $10. It's trading 25% below the price Rocket is trying to buy them for. All I can say is Redfin does a lot of this data analytics. There's no shortage of talk about how companies like Redfin and Zillow are skewing the housing market higher by manipulating data. And then all of a sudden you get a company like Rocket Mortgage, who is the direct beneficiary of those artificially high home prices, and they're trying to buy Redfin at this ridiculously high premium. What could possibly make this deal worthwhile to Rocket Mortgage? Let's just say this one gives me the creeps. I don't know exactly what they're doing here, but I hope this deal does not happen because it just can't be good for first-time home buyers the more I think about it. Anyways, I just want to say thank you very much to Mr. Evan Francis. Lighten up, Francis. There he goes again. One large carry trade with extra margin calls, please. Like, sir, this is a McDonald's. The yen carry trade, guys. Everybody was like so quick. You notice how the financial press last August, how like everything went to hell in a handbasket on Monday. And by Monday night, they were like, don't worry, guys, the yen carry trade is 25% unwound. And then on Monday morning, they're like, don't worry, it's now 50% unwound. Like, oh, well, this will all be over in 2 or 3 days. And then we can all look back and laugh on this like it was just one little unfortunate misunderstanding. It's the best economy ever. Nobody worry. Never mind the fact that we just had all the brokerages go down for maintenance at the same time, taking away the sell button on stocks. Gotta love that. That August 5th, I tell you, that day does not sit right with me. It was almost as bad as the day they took away the buy button for GME. Almost as bad. It wasn't as blatantly fraudulent as that, but man, it sure was close. And I don't think that story is behind us. And I can tell you, Michael Gayed has never shut up about it. And I think he's right to keep talking about it. Sooner or later, he's going to be right. And well, I'm looking forward to that day. I think his feed is going to be hilarious if and when that happens. Thank you very much, Evan Francis, for supporting the channel. Gordon Guanu, what's going on, brother? He says, won't catch me buckling into a Chinese lithium bomb. Talking about a BYD. I certainly would not park one in my garage attached to my house. I wouldn't put any electric vehicle in my garage, having seen what an electric vehicle fire looks like. Hell no. Hell no. Look, I generally share the sentiment about like the quality of Chinese products versus things made elsewhere in the world. I'm with you there. But supposedly these BYD vehicles are so much cheaper than American vehicles. And look, guys, what's happening in the U.S. car market, the middle class and lower income consumers are being priced out of the car market the same way they've already been priced out of the housing market. I mean, car companies are reducing production, so they're limiting supply. They're trying to keep the price of cars higher, and they're focusing on higher margin vehicles, which means big, giant, fat $80,000 SUVs that at this point, 95% of the population can't afford anymore, not without going up to their eyeballs in debt. And so, we need cheaper cars here in America. And it just seems like, much like in the housing market, all the stars are aligned to keep the prices as high as humanly possible, up to and included banning cheaper vehicles from the road. I mean, why is a Toyota Hilux still not street legal in the United States? What possible explanation could there be for that? Oh, it doesn't have enough chips that could get fried and make your check engine light come on. I mean, God forbid we actually be able to diagnose and repair our own vehicles without having to hook up a computer to it. Anyways, I'm just going on a million different tangents. But yeah, I probably wouldn't buy a Chinese electric vehicle myself. That being said, I don't like the way the West is running its auto industry either. Thank you, Gordon, for supporting the channel. And thank you, JJ Watt, who says, Chairman Powell, do you now see the stag or the deflation? Oh, now he does. You better believe now he does in the economy. Now, I would also add, guys, we're not quite into stagflation yet, but we are trending towards stagflation. We're still adding jobs, all right? So we still have relatively low unemployment. Now, the U6, the underemployment is very high, but we still have relatively low unemployment here. And we still have a growing economy, at least as of the last data point. That GDP now, that's an estimate of what this quarter is going to do. So right now, we're still pretty far from stagflation, but I think we're heading there. I agree with the sentiment, JJ. Absolutely. He says, no comment, ha, 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 referring to, what was that, Broadcom president Hawk Tua last week? Oh, I'm sorry, Hawk Tan. Oh, my bad. Sorry, Freudian slip there. Yeah, laughing about violating export controls. I hope they play that recording in a courtroom someday. I can't wait to see him squirm in the witness stand when they play that, saying, why were you laughing about blatantly violating export controls to keep sophisticated AI chips from falling into the hands of the Chinese military, where they use it to train their missiles to be smarter and possibly hit our aircraft carriers, which carry about 5,000 men and cost a few $1 billion each to build? Aren't you an American citizen? Aren't you an American company? I didn't think that was so funny. I don't know. I mean, the Wall Street Journal guy who asked the question, he was chuckling right along with him. I didn't find that very funny at all. But hey, that's just me. Thank you very much, JJ Watt, for supporting the channel. And thank you, everybody, for having your coffee with the Melon Heads this morning. I appreciate that very much. Thank you, guys, for supporting the channel with your super chats, as well as my Patreon supporters on YouTube and Patreon. You guys are also my magnanimous Melon Heads. Links down below, should you feel so inclined. Don't forget that like button and that subscribe button on the way out. Hi, Mom. Hi, Dad. Love you guys. Everybody, till next time, live small and dream big.